Hello and welcome back to Bunnex Investment Group. Today we are going to talk about a strategy that has the potential to give you at most $50 per day if you will be using a zero point 0.1 lot size, because you'll be actually looking to get 50 pips on each and every pair that will offer us this particular setup. So before we jump into this whole video, make sure to hit that subscribe button and check the notification bell icon so that you won't miss any of our videos as we upload. So in this particular strategy, we'll be actually trading the market maker cycle, and in this case, we'll be actually trading the most powerful level of the market maker cycle. So we all know that we have 1, 2, and 3 to actually complete a cycle, and on the third level, we actually anticipate to see it as a fast moving flow because the market makers will be back in control. We know that the first level is actually market maker driven, the second level is retail trader driven, and then the third level is actually a market maker driven level. So in this particular level, that is where we'll be looking to get in or get entries at its initiation point and then enjoy our 50 pips to the peak reversal point. So for this strategy, we'll be actually trading in line with the trend. The trend for this particular one is actually in a downward direction. So we'll be actually trying to get an entry point in line with the market cycle. Then we'll be using this strategy on the M15 time frame. That is where we'll be observing these particular moves. Then our take profit will be 50 pips. Our stop loss can range from 20 to 25 pips, or somewhere above structure. I would love to use or to add the spread pips over the above structure point. Then entries will only be done at candle closes. So we are going to employ two indicators that are going to help us to see or to get these proper entries with ease. These are the 13 EMA and the 50 EMA. So you need to have these on your trading platform. So let's go over the charts so that I'll illustrate how you actually take entry. So this is NZD against JPY. It is the one that we are going to use. We've said we are going to be looking at looking to get entries at third level initiators. The first level is actually market maker driven. The second level is retail trader driven, and then the third level is also market maker driven. So the first level is usually seen by a 1350 EMA cross. In my case, my 13 is the one in red, my 50 the one in blue. So these are the two indicators that are of much use for this particular strategy. After 1350 EMA crossover, we can see that we had the first floor. Then after the first floor, we had a retest of the 50, the second floor, and a retest of the 50 again will be our point of entry, right? Someone may ask, why are we not entering at this point and we still have a huge flow? This is to actually remove the need to count levels from the higher time frames. After seeing a 1350 bounce on the 50, we expect to see another bounce on the 50 for our entry. So cross first floor, second floor, then on the third floor, on the last bounce, that is when we get to look for entries. And entries are made at candle closure below, either below the 13 or below the 50, because sometimes the market will pierce through the 50, and then when it's now on its way down, if we see a candlestick closure below the 50, that is when we press our buy or sell. Let's look for another point we can get. In this case, we had a crossover again on the downward side, but unfortunately we did not have a touch of the 50. We required a touch of the 50 and a touch of the 50 at this point for us to get an entry to the downside. So in this case, we had another crossover, a crossover the first floor. After that first floor, we had the market retesting the 50, telling us to prepare for the next retest of the 50 after a floor. A floor was issued, and then the market retested the 50 at this point, which was another point of entry. We could actually get a good 50 pips in there. We can see it was actually a 75 pip move, and our $50 was actually now in the pocket, right? The next thing, we need to see a crossover. A crossover was issued, right? Although we had a touch of the 50, we actually wanted a move and a touch of the 50, which was not given. A cross was issued here. After a cross, a move to the upside was issued. Touch of the 50, right? We need touch of the 50 and a move. The market actually bounced over the 50, which was also valid, right? At this point, that is when we can see that we had a touch of the 50, a bound, a consolidation on the 50, and then the market went to the upside. So if we could actually catch at this point, although this was a painful trade, our $50 was still going to be issued before the market stop-handed with fundamentals as it did here. So to summarize everything that I've said, the first thing is actually to find a 1350 EMA crossover, the first touch of the 50, and then look to enter at the second touch of the 50. We always anticipate to see 3 levels of the M15 time frame in this particular case, and then enter at the third level initiator, just like that. On that note, we come to the end of this video. Thank you for watching. Like and subscribe, and check out our free Telegram channel. I'll leave the link in the description box below. We have several discounts on our services right now at the time of recording this video. See you on the next one.